Hey, this is Big G, or Gene, or Gino, or Dad, or however you know me. And this is going to be lesson 10. We're going to talk about how to draw and how to use trend lines when you're looking at a stock chart. So you see I'm back on stockcharts.com. We're looking at a stock chart, Chevron Corporation. This is just a daily candlestick chart. Each candle represents a day. And I'm going to go down to the annotate option down here, where I can draw on it. Here we go. And I'm going to choose a line width here. And a trend line, once you watch charts and look at the charts, you can kind of draw them mentally. You don't have to necessarily draw the lines. I'm going to show you how to draw trend lines. A trend line is a common price that touches at least twice, maybe 3 times or more to make it even better. We talked about support and resistance, and here's support down here for Chevron back last year. And you see how that price touches, it was like 1, 2, 3, 4, 5, 6, about 7 times it touches that price. And you can draw that trend line there of support. With trend lines, you also draw angles. They're not just horizontal lines like support and resistance that I talked to you earlier about. Here's a resistance up here. If you carry it on across, you'll see that it broke support here, broke resistance here, came back down, that became new support, dipped down here for a few days or a week, I guess, then broke back, and then that old resistance became new support and back up. But when you're drawing a trend line, you can also notice how you can just connect all the way up that trend, how many times price hits that trend line. And you can do the same thing here. You're hitting 1, 2, 3, maybe 4 prices there, creating that upward channel. And then it kind of rests right here. It draws support here. And then you got resistance here. And you got another little trend going up here. Connect those two wicks on those candles right there, create a little resistance. And then it breaks down. You got support here, similar to the resistance here. See how that resistance became new support. Then you have a gap down. This is probably, I don't know for sure, but this is probably after earnings report or some big event happened. Companies have to do earnings reports every quarter, 4 times a year. And a lot of times after an earnings report, depending on how good the report is, they'll either go up or down drastically and creates these gaps. So this Chevron gap down here, and you can draw another trend line right there as it touches all of those price lines. You see here we got 3 upper wicks we can touch right here. So you got another upward movement here. It drops back down. And if you look over here, you've got some support here. You can draw that trend line there. You got support here. See how many times it touches? 1, 2, almost 3, 4, just barely goes through there. And then that breaks through there. See how it breaks through? Price goes up. And then this creates a flag pattern, which in the next video we're going to talk about chart patterns. But this is called a flag pattern. That's the flag pole, and then it creates like a little flag here. Once it breaks up above that flag, it goes up some more. Support here for a few days, resistance here for a few days, breaks through to a new high, and then this is a bearish flag. Remember, bearish is when it goes down, so this is a bearish flag pattern. There's the pole, the flag's going down instead of the flag going across or slightly up. And then we've got, this is when the market kind of didn't crash but corrected on us a couple of weeks ago. And now, and we'll talk more about this next time, now we have a wedge pattern currently with Chevron. See how it forms a wedge, or some people call that a triangle. And so what I would be looking for here with Chevron is it's going to break through either up or down next week, and whether it breaks through up or down, it'll probably stay in that trend at least for a while, just like when it breaks through up here and we see it break through support or resistance. So this is a wedge pattern. We'll talk more about specific chart patterns in the next video, but this is how you draw trend lines. Trend lines are just lines you draw through at least 2, but 3 is better, common prices. And as you see how these trend lines become support and resistance. So support and resistance doesn't have to be horizontal lines. They can be diagonal lines using trend lines. And like I said, if you do this enough, you'll start seeing it without even having to draw the lines. Let me show you real quick that you may have noticed on our friend finviz.com. Finviz already does it for you. And so if you go to the screener, remember we looked at the screener, we looked at average volume over 1 million. Let's just narrow it down a little bit like we did the other day, under $30. And let's just see what we got here. I'm just kind of rambling. I didn't plan this part of the video. But here's, Finviz basically draws the lines for you. See how they drew the trend lines here, trend lines here, a trend line here. That's called a double top. So Finviz does a lot of it for you. You see where it draws the trend lines. Finviz also has moving averages already in there, which we will talk about moving averages later as well. So you can kind of watch Finviz and see how they draw lines. And there's a good example there. American Eagle, got several trend lines going here. So, but a trend line is just simply that. It's just simply drawing those lines with common prices and looking for support and resistance. So that's a quick lesson on trend lines, and then we're going to look further next time at chart patterns, and you have to be able to draw trend lines in order to determine some of these chart patterns we're going to look at. And those are pretty cool, so I'm looking forward to doing that for you next time. Till then, see you later.